so you can make sure to adapt and prepare. The cycle factor. So one of the key things in analysis is looking at cycles. Now, our lives are ruled by cycles, whether we want to admit it or not. You have the seasons, you have the circadian rhythm, you have the year, the lunar cycle. One of the most powerful cycles that will be triggered is the Great Collapse and Reset coincides with the 100-year cycle. The 100-year cycle is with the Great Depression, right? So in 1929, there was a Great Depression, the stock market collapsed. There was somewhat of a reset coming out of that. This 100-year cycle also matches up with COVID-19 in that we had the Spanish flu in 1918 or so, almost exactly 100 years later. Bear with me. All right, so the dollar will ultimately start to decline. You're going to start to see it sooner than later, but it will accelerate on the way down due to the massive debt load and printing of money from the Federal Reserve. Other currencies will also decline dramatically as other central banks are also pushing this print money, continually kind of just print money to forge forward with paying off debt and all these other factors. All right, the digital yuan, right? We've all heard about that, or I hope we have. China is actively trying to replace the US dollar as the future reserve currency. That is why they've created the digital yuan. It is also why they outlawed Bitcoin in many forms, right? I mean, it's the easiest successful way to get the reserve currency. They're worried that Bitcoin is going to be the world's reserve currency. They don't want that to happen, okay? Ultimately, cryptos will take hold as a reserve. I think they already have started with many people. Global markets. So as this unwind and collapse occurs, global markets will go through something very reminiscent to those of us that went through 2008, 2009, but it will be worse. There's no, there's no difference here in terms of the collapse, but the severity of it will be far worse. All right, crypto flush out. So this is the part that no one in crypto wants to talk about, but this is something that has to occur, right? You have to understand that at this point, there are thousands and thousands of tokens. They all can't survive. You have to have kind of this washout period that was much like the dot-com bubble. For those of you that are into investing and trading and have been around for a while, you remember in the late 90s, which was actually when I started my career as a trader, there were so many dot-coms coming out. In fact, someone would open up a dot-com from their parents' basement, and before you knew it, it would go to $100 million valuation. And it was really nothing other than sending out something in the mail from their parents' basement. The strong will survive, right? So there will be coins that will survive, but stuff like meme coins, joke coins, a lot of tokens, they will be wiped out. In my opinion, 95% of them will be gone. So choose wisely, right? I think being in cryptocurrency is an amazing opportunity, but again, don't necessarily look for the one that's going to go up 5,000%. Focus on preservation of capital, knowing that some flush out will occur. All right, a great example is Amazon, right? So Amazon debuted in 1997 on the NASDAQ, and Amazon was basically in a position where it went through the dot-com bust, and it went down to what we would refer to as pennies, right? I mean, it was literally a penny stock. But look at where it is now, $3,300 share price, and obviously $1 trillion valuation. So you're going to see these ups and downs in crypto. For those of us that have been in cryptocurrency long enough, we know that every few years there's some big washout, and it likely will continue. Okay? All right, so what emerges here? 5% of cryptos will become the gold standard, right? For the future of currencies after the people rise up and demand it. Now, when I say people rise up, I don't necessarily mean that you're going to have this, archaic kind of, crazy, rival, just rising up and demolishing things that might occur. But it's more that the average person is seeing their dollars or their currency being just diluted over and over again. And you can already see the wealth gap emerging. Ask yourself this, has the wealth gap, and I'm strictly speaking from the United States perspective, has it gotten better or worse since the Federal Reserve has printed trillions of dollars and run up their balance sheet, or the national debt for the US? It has gotten way worse. So what that's telling you is that the rich are getting richer and the rest of everyone else is getting left behind. There's going to be a revolt. It happens in every society. Look at history, right? It happens in every society. All right, a new body. So when I say the demise of the Federal Reserve, I'm not necessarily talking about like it will vanish and there won't be a body. The government will want someone there But the key is it's going to be born with a new crypto type currency. Maybe it's something called a digital dollar or something like that. And basically the government will still want to have some sort of control, but there will be controls on how much that currency can expand on a yearly basis. This entity will not be able to just continually print and charge money into the economy like they're doing now with $120 billion a month that they're pumping in via their bond buying quantitative easing. Okay? After many hard years, this changeover will usher in a new period of transparency, which I think we can all agree is a positive. All right, so let's go here to the demise of the Federal Reserve and how it will occur. All right, the Federal Reserve was formed in 1913, and their goal here was to basically monitor the currency, you know, inflation, currency, which is a very simple thing. It's the parent in the room, and their job is to be strict, making sure you don't see a lot of shenanigans. All right, if I'm a parent, I got to do the same thing with my kids. I'm sure a lot of you guys are as well. The issue occurred in 1977. The Federal Reserve received what is known as the dual mandate, and this was basically the beginning of the end of the Federal Reserve. And it's been a long process, obviously 1977, but this meant that they had to focus on unemployment. All right, so the Fed now has to be the adult in the room, but at the same time, they have to be the one that says, hey, well, we got to give them candy all the time because we can't let unemployment go up too much. Our job is to keep it low. That fundamentally cannot work. You can't have the parent being both the good parent, meaning that they're strict and firm, and also the parent that's just giving in to whatever the child wants. And I mean, a great example of this, we saw this in 2018 when the Federal Reserve came out and said, all right, we're going to start raising interest rates. And what happened to the market? The stock market threw this massive hissy fit and dropped 20% in a matter of 6 weeks. And what did the Fed do? They backed right off. They said, oh, okay, well, we won't do that. We're going to go back and start lowering interest rates again. All right, so again, the two mandates can't function together. By definition, the Fed now has the mandate to fight every recession, downturn in the economy, because they need unemployment to stay low. All right, the human condition is another factor, right? So you have Ben Bernanke, Janet Yellen, now Jerome Powell at the head of the Fed. The Fed is supposed to be independent. In reality, it's not. Right? You have influences from politics coming in, and the bottom line is the human condition, right? No Fed official wants to be the one that caused the massive collapse. They don't want to be the strict parents that has the child throw the big fit and be remembered as the one that caused the markets to drop 50%. So again, there's this human condition that's always going to sway them towards print more money, low interest rates, never play hardball, and just let things go as they are. Let it be the next person's problem. And again, for those of us that are younger, it's becoming our problem, and we're going to see this shown out. All right, every bubble that has occurred, you know, since 1977 is a direct result of the Federal Reserve. And again, you're not going to hear this in the media. They're not going to talk about this, but in essence, it is, because look at the dot-com bubble. The dot-com bubble collapsed, and what did the Fed do? They dropped interest rates. Right? They made lending easy. Well, what happened? The banks said, well, listen, we can make a lot of money by giving easy loans to people that shouldn't have them. And what happens? We get the financial collapse. From the financial collapse, what does the Fed do? The Fed says, okay, well, now what we need to do is we need to lower interest rates even more, make money even freer, and print more of it as well. All right, so they lowered even more. We basically have zero interest rates. We now see introduction of quantitative easing, which is even more. I mean, it's not just low rates. Now they're just printing money and pumping it into the system, all right? So you then look at where we currently are. We're now at the extreme. Each bubble gets bigger and bigger, and that's where the fear comes, that at some point over the next, decade, we are going to have a reckoning. And again, from that reckoning, Bitcoin, blockchain, these type of things will be the future. And again, that's why I don't want you guys to fear. All right, so take a look at this chart. This is a chart of interest rates. Notice how prior to the dual mandate, the Fed actually had a backbone. They actually would raise interest rates higher on a every so often, every decade or so basis to fight inflation. Notice since that mandate went into effect, interest rates have fallen, small bounce, fallen even more, lower bounce. So basically what you're doing in this chart is making lower highs and lower lows, and eventually you're now at zero. The question is, do we go into negative interest rates in the next crisis, which is very, very possible. All right, I do think, by the way, at some point, You will see interest rates go up, not because the Fed wants it to, but because the world is going to demand it. People will not loan us money, and the question is how much can the Fed print to offset that? Here's another chart. This shows the Federal Reserve's balance sheet. So notice how starting in 2005, it was under $1 trillion. It's just ballooning. So what they're doing is they're basically just keeping the patient alive with drugs. I mean, the drugs essentially are the money line here. This is what they're doing, and this is the only way they're able to keep this bubble from collapsing. And lastly, here's the national debt. You guys can see that going back to when the Federal Reserve in 1977 was given that dual mandate, debt was very, very low, and just look at that spike to the upside. More money in the system, eventually it cannot continue and it will implode. In layman's terms, a good example, as I said before, the Federal Reserve banks, I consider them to be drug dealers. All right, the stock market is the drug addict. The drug addict always needs more drugs to get the same high, and that's why you see the Federal Reserve continually lowering rates, make money cheaper, and continuing to print money. The problem is that if the Fed ever cuts off that supply, what happens, right? If they ever even reduce, I mean, think about drug addicts. If you reduce that inflow of drugs, you go into withdrawal, and that's what the markets will see. And the problem is the reason why you see them constantly getting more is because it takes more and more drugs to keep that same high, to keep that bubble going until that collapse. All right, the Fed mains tool, the stock market is the main way the Federal Reserve keeps unemployment low. If stocks are going up, people have more money to spend. It stimulates the economy. That's why the Fed has focused on the stock market so much. Ultimately, if they raise rates, we see the stock market decline. What happens to the economy? It declines. What happens to the unemployment rate? It goes up. They have to re-stimulate to push that unemployment rate low and meet their mandate. It's essentially the excuse for them keeping the pumping going. From the ashes, all right, this is really what I want to leave you. There's a lot of fear, a lot of negative, but like I said at the beginning, don't let it worry you too much. This is a normal thing. Remember, cycles are normal. I'm a big believer that if you left the Fed out of the picture, you would have these normal ups and downs in the economy, and no down would be too bad. The Fed has gotten involved and hurt that. All right, they've created these bubbles that then cause bigger collapses. But from the ashes, you will see cryptocurrency rise as the new norm. All right, remember, cryptocurrency, there'll be a lot that get washed out. The strong will survive, just like I said Amazon and Google did. Bitcoin will be the digital gold and easily be valued at $500,000 in the future, probably 10 years out or so. And again, countries will adopt digital currencies as their future with restrictions on the amount of expansion of that money supply. So it's the people can say, okay, I know how many dollars or digital dollars there will be. Any 1 year, it can be calculated. They know going forward years in advance. And you'll also, in my opinion, see the US government and other governments be forced into more of a balanced budget situation. All right, guys, that is all from me. So thank you so much, and I'll be up here again in just a minute. Thank you.